known for its tough grind. It's known for its uphill battle and innovative ideas, and it strives towards spreading the awareness and the need of recognition in the field of finance, economics, and business. And uh, generally speaking, this society wasn't made in an overnight. It took so many years of consistent effort from our respected seniors, especially a few of them, and and that is what made this a dream a reality today. And our seniors would have dreamt for this day. And some of the seniors even helped us, even getting passed out of our college, even helped for the upliftment of this society, making this dream a reality. And one for such fine example is Mr. Nawaz and our today's guest. It's a pleasure having you as a speaker of our first webinar, sir. So again, guys, if you are comfortable, please switch on your camera so that it will help in increasing the interactiveness of this webinar. And save your doubts for the last, they all will be dealt with. And now I welcome Mr. Nawaz NM to enlighten us regarding career opportunities and resume building in finance sector.
Yeah. Hi. Thank you, Nishal. Just give me a minute, guys. I'll just share my screen and we can get started. Yeah. Can any of you confirm if my screen's visible?
Yes, it is.
Yes. Right. Okay, guys. So before I get started, I'll just give you a quick overview on what's going to happen today. This is a very general session on what the career opportunities are in finance. I will be deep diving into maybe one or two particular aspects of it that I have prior experience with. But apart from that, the session is just to give you an idea of what are the different possibilities out there in the sphere of finance. We'll start off with a quick introduction. So I'll just tell you a brief about me. So hi, I'm Nawaz. I've recently graduated from IIT Bhubaneswar with a dual degree in mechanical engineering. Very early on, I sort of got to know that, I don't see myself in mechanical engineering in the long run, which is why I started sort of exploring other avenues to basically figure out where I would do well. Apart from core engineering, the only other option that's primarily available to engineering grads is getting into coding, so software dev roles. But what are the non-core, non-tech opportunities that are available to you that's primarily not known, and you are pretty much on your own to explore this space? That's how I was. I got to know about, towards the end of my second year or so, that there's this world of finance and there are these particular opportunities out there. And that's where my initial interest in the world of finance and the markets in particular sort of started. And I took up a lot of, I had to do a lot of skill building and profile building with respect to before I was able to land a couple of internships in this space and then sort of work my way from there. So I had the opportunity to intern with Ernst & Young, which is one of the big four accounting firms in the world. I interned with them twice in their financial services and risk management division as a summer analyst. I'll talk a bit more about my roles there at a later point of time. Post that, I got quite into the world of quantitative finance, which is when I took up an internship as a quantitative developer at Finment Research Capital, which is a quantitative finance asset management company. So that was, and moving on, I will be joining Futures First, which is a proprietary trading firm as a market analyst next month. That's a brief introduction about me. We'll move on to what are the, I'll give you a quick overview on what the options are in the world of finance. So what you need to know is that finance is not just the markets, the stock markets. So there's a whole lot more to the world of finance than just the markets. So we'll be delving a bit into what that entails. So we'll start off with investment banking. This is one of, I guess, the most, one of the finance jobs that's associated with a lot of prestige. This is primarily for post-MBA folks from some of the top unis. but even undergrads have a shot at getting analyst roles at the bulge bracket investment banks. So you would have heard, especially over the last year, there have been a lot of firms that have been coming out with their IPOs, right? There was Paytm, LIC, and all of that stuff. Uh, who is the one that is getting these companies? Who is the one that's helping these companies with their IPOs? It's the investment banks. So the services offered by investment banks range from IPOs to mergers and acquisitions, raising equity and debt. So I'll delve a bit more into this aspect of it. Coming to IPO stage, so you're basically a firm, a private company that's been running for quite a while. You realize the need to raise a large amount of capital. So you go approach an investment bank, say that, hey, look, we want to have an IPO. What price or what do you think is should our valuation be? So that valuation, the price that you actually pay at the IPO, is decided by the investment bank. What they do is they go through your books. They see what your balance sheet looks like, what your profit and loss statement looks like, and based on that, they create financial models that sort of give them an indication that this seems to be a fair value for your company. Then there is another aspect of investment banking, which is mergers and acquisitions. So one firm acquiring another firm or two firms being merged together. Again, that is all handled by investment banking. The way these firms make money is that they primarily work on extremely large deals, so $1 billion deals or so. And based on the deal size, they take about a small percentage of that as a cut for facilitating the transaction, and that's how these banks make money. And you have very small size teams that are working on these deals. So the entire percentage of cut, so about 2 to 3% of, let's say, $1 billion deal, is spread between first the firm and then about 10 to 15 members. So there's a lot of money that goes into each individual VP or managing director's pockets in this space. Within investment banking, you have bulge bracket banks, middle market banks, and elite boutiques. So bulge bracket banks would be typically your big short banks that you would have heard of, like Goldman Sachs or Morgan Stanley, JP Morgan, Bank of America, Merrill Lynch, so on and so forth. Middle market banks are typically something like HSBC. So bulge bracket banks, the difference would be that these banks primarily work on deals which are well over $1 billion. Middle market banks are typically banks that work with deals that are around that borderline. And elite boutiques are these very specific firms that specialize in one or two aspects of investment banking. So either they have way too much expertise in IPO or merger and acquisitions or leverage buyouts and so on and so forth. That's investment banking. Primarily, the skills you would need in investment banking would be financial modeling, extremely good quant skills, and extremely good people skills. For most jobs, this is the norm, except for very specific jobs that I'll go over here. Asset management. So, what's asset management? This is another bucket or another route that you can take in finance. So all your mutual funds, your hedge funds, you have very specific asset management divisions at bulge bracket banks. These are all basically firms operating in this asset management space. What do? They manage your assets. And there are different sort of categories of firms for different that sort of deal with different types of people. So let's say you as a retail investor, you and me as a retail investor, we only have access to either direct equity investing. So either you are taking care of your assets on your own by investing them, or you sort of invest into mutual funds directly. And what is happening within a mutual fund? You have fund managers or, or portfolio managers, which are basically for specific funds, which are specifically investing based on one particular risk return methodology. So you have, let's say, blue chip funds, you have, let's say, growth funds and stuff like that. Blue chip funds would be targeted only, or they would be mandated with investing only within blue chip companies, such as your extremely big short companies like, let's say, Reliance or Tata Motors or stuff like that. And then you have hedge funds. Now, hedge funds are extremely tailored investment vehicles that are not, usually open to the general public. They're only open to extremely high net worth individuals. Some of the hedge funds that you might have heard of would be Renaissance Technologies, or let's say BlackRock. BlackRock is one of the largest asset management companies in the world, and you also have asset management divisions within your bulge bracket banks like Goldman Sachs or JP Morgan. And yeah, primarily your job within asset management would be either extremely client facing, or it would be more of a back office role where you're just sort of performing stuff like equity research. So you might be assigned one particular asset class or one particular stock within one domain, and you are expected to sort of perform a research and give your let's say targets on that stock. So maybe if you've ever been on sites like Money Control or stuff like that, you'll see that there are some analysts that have given a rating for the stock: a buy at this level, sell at that level. So that's all done by equity researchers within asset management. Coming to prop trading. So prop trading or proprietary trading is basically a form of trading where you're taking directional bets. This was extremely popular pre 2008, before the financial crisis that happened in 2008. Most of the bulge bracket banks had prop trading divisions or prop trading desks within them. But post the 2008 crisis, a lot of changes were introduced, at least with respect to the policies, and this was made. And prop trading was sort of removed from bulge bracket banks. So they were not allowed to take directional bets on any particular asset to make money off it. So what prop trading desks would do is, or if you were part of a prop trading desk, what you would do is you would be assigned one particular asset class. So let's say you could either be trading equities or commodities like oil or energy or even crops or gold, precious metals, or let's say interest rates and bonds. So any asset class, you could be in charge of trading that in one particular market, and your job is only to analyze that asset class and take a directional bet on it to make money. That's your sole purpose. There is no concept of working for a client or so. It is the company's money that is being traded with a view of increasing profits. That's solely what prop trading is. Jump trading, DRW trading, and Optiver are some of the biggest names within the prop trading space. In India, you'll have firms like Axela and Futures First that are operating within this space. So again, what you would need is to be a very numbers oriented person for this role. You don't really need a lot of people skills in this space. Same goes with quant finance, I would say. So quant finance is basically so the way you would go about analyzing securities is you could either perform something that's called technical analysis, where you use charts. You could perform something called fundamental analysis, where you sort of deep dive into the financials of a company. So like the annual reports, figure out what the go through their profit and loss statements, go through their balance sheet, go through their cash flows, and then figure out what is the correct price for this particular asset, and then take your trading decisions based on that. And then there is this particular facet of finance, which is quant finance. This is sort of up and coming, and the way this works is you employ either machine learning or statistical models, extremely complicated math models to sort of generate actionable insights and trade based on that. Quant finance is primarily employed within the world of algorithmic and automated trading. So high frequency trading. What happens here is trades are occurring within milli to microseconds. Before you can even think about it, you've already coded an algorithm that gets that generates signals based on when certain conditions are met, and based on that it enters and exits into trade. This is what quant finance is all about. The typical roles you would find in quant finance would be that of a quant analyst, a quant researcher, or a quantitative developer. Quantitative developers, you can think of them as the software devs of the quant world. So what they do is they interact with quant analysts and quant researchers. Quant researchers are typically PhD folks who are whose day-to-day job involves reading through research papers, generating trading ideas, and testing if they work. Quant developers are primarily responsible for building tools that will assist your traders and researchers. And yeah, so um, with respect to at least India, people interested in this space can definitely check out the JP Morgan Quant Mentorship Program. It happens every year, and if you sort of get selected for it, you get the opportunity to intern with JP Morgan's quant division. You also have opportunities in US based hedge funds like World Quant and Trex Quant, where you can serve as I guess contract researcher. A lot of students in their third years typically do this, at least from BITS and older IITs. Some other firms that operate, at least in India, are Tower Research and Quad. Again, in the last placement season, also in 21-22, I guess the highest domestic package was offered by quant finance firms. That's typically the norm. If you are good enough to sort of get into any of these firms, in terms of pay, you're gonna be right up there. So, for example, I'll give you an example of how much Jane Street actually pays. When I was talking to another friend of mine from IIT Madras, when he was serving as an internship coordinator there, he told me that Jane Street came for very specific quant analyst roles for their Hong Kong office. And when they sent in the initial job description with the details of the pay, the internship coordinators had to go and talk with the HR once just to confirm if they had not, they didn't have a typo in the job description, because there seemed to be one or two extra zeros within the salary. So, in terms of pay, at least even both domestic as well as international, you would have, um, and for engineers, given that you are extremely good at coding and you have some amount of interest within finance, quant finance would be one of the most ideal things for you guys to explore. I'll just give you a bit of an introduction into what private equity and venture capital is. This is typically, you're not going to get these roles right out of your undergrad. These will require extremely specific experience, either investment banking experience or investment banking experience coupled with an MBA before you sort of land these roles. These are also highly sought after. So what happens in private equity is that a private equity firm is, I'll talk about venture capital, then we'll move on to private equity. So again, with all the IPO frenzy and startup frenzy that was happening over the last year or last couple of years, you would have seen that startups are coming up with announcements like, we are happy to announce that we've raised these many $1 million from these firms, right? A Series A or Series B or whatever seed stage. That is all venture capital. What happens in venture capital is you have these very specific firms or funds that invest into very early stage startups. They provide mentorship to them and they help them grow. The end goal of venture capital is basically to, let's say, it's not to pick 100 winners. The goal is to just pick, invest in startups that seem promising and hope that at least 10% of them end up performing extremely well or going to the IPO stage. So imagine if you were one of the early investors into a Microsoft or an Apple, or even recently, let's say you were one of the early investors into Ola or stuff like that. So that is the end goal of venture capital. It is to fund very early stage startups or ideas, help them grow, and then exit at a profit. Private equity actually comes in at a much later stage. So once a startup, once an idea has grown to a certain extent, it's slightly mature. Private equity firms basically come in at that point to give a much larger dose of funding. They typically are involved in leveraged buyouts, which basically mean that they buy out the entire firm. So let's say a publicly listed company is not doing well, a private equity firm could step in, buy the entire firm, all the publicly listed shares, delist it from the markets, take it private, work on it, turn it around, and then sell it for a much higher cost. So that's what private equity does. It takes maybe not companies that are not doing that great and turns them around and then sells them for a much higher price. That's what private equity primarily is. Then you also have another bucket, which is typically corporate finance. or valuation and corporate advisory. So corporate finance divisions would be there in each and every corporate that you would know of. Even tech companies, all tech companies would have an in-house finance division that is basically telling them what their current finance needs are, what should be, what projects seem to be most beneficial for them from a financial viewpoint and stuff like that. And then you have valuation and corporate advisory that is typically done by big four accounting firms. So think Deloitte, Ernst& Young, PwC, KPMG. So what happens in these is that these big four companies offer risk management or other services to different corporates, saying that, hey, this is where you can face a problem, and this is how we think we can come and assist you with our expertise. This is just a very general overview onto the career options that are primarily available within the world of finance for engineers right out of their undergrad. I guess the most accessible ones, even though they're still difficult to get, the most accessible ones would be prop trading roles or quant finance roles or roles within asset management. Valuation and corporate advisory at a big four is, I guess, slightly easier to get than quant finance, prop trading, and asset management roles. Investment banking, private equity, and venture capital are extremely hard to get right out of your undergrad, and you will most certainly have to do a very specialized degree or an MBA for you to be, to even have a shot at these roles. Coming to profile building, right? So you're not gonna dive into finance before you know that, whether this interests you at all or not. What you're gonna typically do is, I guess if you're in your first year or second year or even in your third year, you really do need to, and you don't really have an idea of what interests you a lot. You don't have particular interest within your core field of engineering that you're currently pursuing, maybe metallurgy, maybe electrical, whatever. And maybe you can code, but you don't enjoy coding that much. So this would be a perfect time for you to just try exploring what are the other avenues available. Finance is one of them. Consulting is another one. Product management is another one. So, you just need to figure out what are the different avenues that you can go about exploring and start cutting out each and every one once you finish exploring it, just to have a better idea that, okay, I've tried this doesn't seem to work. The way you're going to go about exploring it is you're not going to take on a very heavy endeavor for your start. You're just going to try it out by taking a very short term course. Okay, maybe you do an online course from, let's say, Coursera, NCFM, or NISM, or you have electives within your college that are being offered, such as economics or financial management or banking, stuff like that. You take those up, then you see that, do I have any particular interest in doing this? If yes, try a couple more courses. If no, well, you gave it a shot, right? So, a couple of courses I would recommend for people who just want to get started are Financial Markets by Robert Schiller. He's from Yale and he's a Nobel laureate. These are all available on Coursera for free. Financial Markets and Investment Strategy Specialization by ISB, Trading Strategies and Emerging Market Specialization by ISB. So these are courses that I initially took up when I was exploring the world of finance, and they really helped me build that initial bit of interest and, some amount of credibility within this space. You have very short-term certifications from NCFM and NISM, which is basically taken by the National Stock Exchange or SEBI, which is Securities and Exchange Board of India. So these guys offer you, certifications and courses that you can take up. Shouldn't take you more than 2 to 4 weeks of your time, and there will be a written examination associated with it. Another thing I would recommend people who think they'll be more into, let's say, equity research or investment banking would be take up a very short course on financial modeling. This is basically where you build a model of a company and try to value how much it will be worth. Okay. So this is how you're going to start off. You're going to start off with very short online courses, see if there's any bit of interest from your end. If there is, then you need to sort of figure out what particular aspect of finance interests you the most. Is it trading in stock markets? Is it private markets? Is it valuing companies? Is it building a portfolio? What is it? After you figure that out, you need to perform some basic, at least rudimentary research into what are the roles in this particular space, and then reverse engineer for yourself. So you are at this particular point here. You want to get to this place. What are the skills required? Especially what are the key skills required, and how are you going to get these opportunities? Another thing you need to keep in mind is most of these finance roles are not going to be coming for you for on campus recruiting. That's not going to happen unless you're from a feeder school like one of the older IITs or something, where firms still come for very specific finance related roles. If not, you are going to be on your own, and you will basically have to network your way to these opportunities or take part in competitions that are giving these internship opportunities. So that's one. Another thing, yeah, I like to talk about CFA and FRM. So CFA is basically, these are very heavy certifications within the world of finance. Okay, they have a lot of credibility. So especially for engineers who are trying to carve a career in the world of asset management or risk management, these two certifications are like the gold standard. They would at least take you a year to 2 years to complete. CFA is Chartered Financial Analyst, and it has 3 levels. It will basically teach you everything from portfolio management to ethics to basic finance concepts to everything basically related with the world of asset management. FRM is basically financial risk management. Risk manager, that's the certification, and this is typically useful if you're trying to look to break into, let's say, ratings divisions of banks and stuff like that. Risk management is actually pretty widely employed in all corporates as well as big four. You have specific risk management divisions that sort of advise companies saying that these are your key financial risks and this is how you can go about mitigating it. All right. Gaining experience. So fine, you've sort of figured out that you have an interest in finance. You've taken a couple of courses, or at least to put on your resume, and you've sort of figured out what are the skills required for you, or what skills you need to particularly focus on for whatever role you're looking for. How do you sort of go about getting that role? So again, if you don't have any prior experience, it's going to be extremely hard for you to get that initial internship. But the way you can make your or increase your chances for that initial internship would be to do projects, on your own, life projects. So I'll give you my example. Towards the end of my third year is when I realized that quant finance seems extremely, interesting, and I want to at least pursue one internship there to figure out whether I want to do this in the long term or not. So to do that, I had a bit of coding expertise, and I started creating my own trading algorithms. I back tested them. I sort of created this dashboard that showed performance and all of that. And that's how, by putting all of these courses and the projects that I did on my own onto my resume, I was sort of able to send a signaling effect that, hey, look, I already have the background knowledge that's required, and I've already gone out of my way to actually build good projects. And this is what was primarily talked about, or it helped me land that interview. And my projects were primarily what we discussed the most about during the interview process. I think that is what landed me the internship finally at a quant finance firm. Case competitions. So you've done a couple of projects. Next would be to take part in a couple of competitions that are present. So for quant finance, there are very specific competitions that are typically held by World Quant or JP Morgan or other banks. Or you also have case competitions by firms like Ernst and Young and stuff like that. I took part. So my first finance internship was due to me and my friend coming in one of the top positions at one of the case competitions that was conducted by Ernst and Young. That is what gave me my first break in the world of finance, and that's when I had the opportunity to intern with EY's Financial Services division. I'll talk a bit more about the work I did there and what a typical day would look like. Personal portfolio management. So I wanted to get into quant finance and asset management. So if you're saying that you're looking to bag a role in asset management and you're not even managing your own portfolio, you're not getting that role. You know, you need to have a very good understanding of what's going on in the general economy around the world, what's happening right now, as well as let's say, this is a very good talking point even in interviews where you can say that I have not only done these courses, but I've actually gone out of my way a step further to actually employ these learnings and built my own portfolio. That would then lead to, them asking, how did you go about it, or what were your investment ideas? That will, at least put you in a much stronger light, and make you more eligible for those roles. And then internships, obviously. So once you do these, if you're going to have to look for internships all on your own, you'll have to, extremely leverage LinkedIn or other job portals. Reach out to, first step would be to try to reach out to your college alumni working in these spaces, see if there are any open positions. Otherwise, it would be cold mailing recruiters with your resume. It's pretty much it about this. Yeah. What's the work like? So I'll just give a bit of a background on the work I did at EY and Finment. So the role at EY in their financial services and risk management division fell into the bucket of valuation and corporate advisory that I initially told you about. So I had two primary projects here, which was basically what EY was doing was they had to design a pre-sale strategy. So they were identifying which companies they needed to approach and offer them risk management services. Okay. So we had to evaluate different clients for them. I was tasked with analyzing a big pharma company with about a $2 billion market cap. I had to take a deep dive into their financial statements, their annual reports, see what the trend is, where is this company hurting the most, and what is causing this. Okay. What are the key risks, key challenges this company is facing, and how can EY sort of come in and give them solutions that could help them improve their bottom line, which is basically their profits, right? That was one key project. Second was ESG investing in analysis of the auto sector. So ESG is environmental, social, and governance. So day to day, you are typically, at least for corporate advisory and valuations, you can expect to be surrounded by annual reports itself. You need to know what is present where. And communication skills are again key in this because this is not a very individualistic or quant heavy role. It is more about analyzing and communicating those findings to upper management rather than performing some extremely deep number crunching. Coming to the internship that I had at Finment Research, my role was that of a quantitative developer, and the work here typically involves, you have a strategy idea, you need to code it out you need to automate the entire strategy and code it out. That was primarily the work there. That and automating a lot of in-house processes. So we had a lot of clients whose money was being deployed into various different strategies within the Indian markets. And at the end of the day, you had to sort of mail them or let them know that, hey, this is what happened with your money today. This was what it was at the start of the day. This is what it is now. These are the trades we took for your account, and so on and so forth. So trying to do this manually was extremely time taking and didn't make sense at all. So my role was basically to sort of code this out in such a way that once the day is over at 3:15 when the markets close, mails are automatically, you sort of keep track of the different positions that are open for different clients, what their balance is, so on and so forth. And then you automatically, the system sends them a mail saying that this is your end of day report. That and, stuff like storing trading data, back testing strategies, optimizing trading parameters, how to improve a strategy, stuff like that. That is primarily what my role would be. On the right side, what I've shown you guys is basically, so recently I was approached for the role of a quantitative developer at a quant finance firm, and this is what the JD looked like, at least for a quant developer. So this is primarily for folks who are extremely good with coding and know that they have some amount of interest within the world of finance. You can definitely look at this. look into quant finance roles. So yeah, that is pretty much it from my end. I just wanted to give you a quick intro into what the various aspects of finance were and what you could be expecting, post undergrad. Let me know if you guys have any questions. We can have maybe short Q&A session, and we can call it a day. So if you have any questions, you could just unmute yourself and ask, or maybe type it down in the chat box.
Sir, could you please tell like how is the pay scale as compared to jobs in core sector of engineering?
Again, core sector of engineering. Which core sector of engineering?
Mechanical as of mine.
Okay, I'll just tell you that at least with respect to, let's say you somehow land a very coveted investment banking role right out of undergrad. This is typically investment banking firms mostly go only to the old IITs like IIT Delhi or so, and they handpick a few folks for these roles. You can expect anywhere about 20 to 30 in India for investment banking roles. Asset management is widely differing. It will depend on where you've landed, a mutual fund house or a hedge fund or what. That is totally dependent on where you land. I can tell you that quant finance, at least, if you land a job as a quantitative developer or a quantitative analyst at some of the major firms here, you're definitely getting much more than what a software developer might be making at Microsoft, Amazon, Apple, Google, all of that. So in terms of pay scale, it is highly rewarding. It is finance at the end of the day, so you are dealing with a lot of money. But yeah, if money is a motivation, again, finance is one of the best places to start your career. But if money is the only motivation, you're not gonna sustain yourself for a long time. So that's in terms of pay scale. It will be much higher than the right roles would give you much higher compensation as compared to core engineering roles, even the best of them.
Thank you, sir. And so like how is the progress like once someone joined the company? So like what are the chances of progress there? Like promotion
Again,
and all.
okay, so it depends on where you've sort of entered. Okay, it depends from firm to firm what role you've entered. So finance is a very broad thing, right? Progress is obviously going to be there. So if you take the investment banking route, you start off as an analyst, you're expected to work for 2 years, then you get promoted to an associate, which is typically what post MBA students join in as. You work for a couple of years, you move into vice president, then managing director, and then finally partner. So there is, in finance at least, there's a very structured path to careers in, structured growth path for careers in asset management or investment banking. Stuff like quant finance and let's say prop trading for that matter. There is no structured promotion pathway as such. But again, in terms of money that you'll be making, I guess you can expect to make quite a bit within prop trading and quant finance. provided you are able to sustain yourself and hang on.
Thank you, sir.
Well, it was a privilege to have you here, sir, and I hope the audience attending the talk has learned so many informative things. And thank you for attending the webinar, sir. And thank you everyone for watching the event. And we would be conducting a similar workshop on 2nd June regarding stock markets and all by a very renowned person. And so I request you to follow our Instagram page so that you can regularly get updated and get to know the who's going to be the speaker on 2nd June. So that's it for the day. And thanks everyone.
Guys, like, can we just turn on our camera so that we can take a snapshot to be posted on our Instagram page? Like, if we all can turn on our camera. I request to the audience to turn on their camera if they are comfortable.